All right, let's talk about one of the most powerful tools a trader has, candlestick patterns. Have you ever stared at a trading chart and it just looked like a bunch of red and green squiggles? Well, by the end of this, you're going to see it as a story, a language, and we're going to teach you how to speak it.
And look, that's not just some made-up quote. That came from a real trader right after bagging a 10% gain. So what was their secret? It wasn't a crystal ball. It was just understanding a single pattern on the chart. And today, we're going to unpack that exact same toolkit for you. So here's the game plan. First, we'll learn how to actually read the story the candles are telling us. Then we'll get into the fun stuff, the patterns that signal a market reversal and the ones that confirm a trend is still going strong. And super importantly, we'll talk about why these patterns aren't a magic bullet. Then I'll wrap it all up with a pro tip that's going to make this all way easier. Let's do this. Okay, so just think of candlestick patterns as a visual language. Seriously, every single candle, and especially how they group together, is telling you about the epic battle that's always happening between buyers and sellers. And once you can read that story, you can start making some seriously good predictions about what's coming next. First up in our toolkit are the patterns that basically scream, hey, things are about to change. These are what we call reversal patterns. They're like your early warning system that a trend is getting tired and might be about to flip. Let's start with a classic. The engulfing candle. This one's a big deal. It's when one candle's body completely swallows the one before it. So if you see a big green candle just totally engulf a smaller red one, that's a huge sign that the buyers have just wrestled control from the sellers. And if it happens at a key price level, a ceiling or a floor the market has bounced off before, it's an even more powerful signal. Okay, so if the engulfing candle is shouting at you, the doji candle is more of a whisper. It's a pause, a moment of pure indecision in the market. You see, a doji tells us that the price opened and closed at almost the exact same spot. Buyers pushed, sellers pushed back, and nobody won. It was a draw. And that kind of indecision often pops up right at the top or bottom of a trend, just before it reverses. So the pro move here is to spot the doji, but then wait for the next candle or two to see which side finally wins the fight before you make your move. Now, you're going to see a few different flavors of the doji, like the dragonfly or the gravestone. They look a little different, but don't get bogged down in the details. They all tell the exact same story. The current trend is running out of gas, and a reversal could be right around the corner. Next up, the hammer and the shooting star. These are all about one thing: rejection. A hammer forms when sellers try to tank the price way, way down, but bam, the buyers come storming back in and push the price all the way back up. It's a huge rejection of lower prices. And the shooting star? It's the exact opposite. Buyers get rejected hard. That long wick is basically the footprint of the battle. Okay, how about the tweezer pattern? This one is a great two-candle setup. What you're looking for are two candles that have wicks at almost the exact same level. A tweezer bottom shows that price tried to break a support level, failed, tried again, and failed again. It's a super strong sign that the market has found its floor. And a tweezer top, of course, is the same thing, but at a ceiling. This next one isn't about just one or two candles. It's a whole story playing out over time. When you see 3, 4, 5 candles all trying to break through a price level and getting rejected over and over again, leaving a trail of wicks, that's a huge tell. It's like the market is knocking on a door, but the door just isn't opening. That repeated rejection tells you exactly who's winning the fight. All right, so we've got our reversal patterns down, but what about the opposite? How do you know when a trend is healthy and has room to run? For that, we need our trend confirmation patterns. These are the ones that say full steam ahead. You literally cannot miss a momentum candle. It's this monster candle that's 2 or 3 times bigger than everything that came before it. Now, it's most powerful when it breaks out of a boring sideways market. Why? Because all those traders who bet the other way? Their stop losses are sitting right outside that range, and this giant candle triggers them all at once, which basically adds rocket fuel to the new trend. And for a sign of pure, undisputed dominance, we have the Marabuzu. This is a candle with no wicks at all. None. Just a solid brick of color. That means from the moment the candle opened to the moment it closed, one side was in 100% control. There wasn't even a flicker of doubt. Seeing one of these in the middle of a trend is a great sign that the move has plenty of power left. Okay, so we've got our reversal patterns and our confirmation patterns. But before you run off and start trading, we have to cover the most critical rule of all. Seriously, this is the part of the user manual that you absolutely cannot skip. This might be the single most important thing you hear today. Candlestick patterns are not magic. They are not a crystal ball. Think of them as hints. as clues. They're amazing for confirming a trade idea you already have, but they should never be the only reason you enter a trade. So here's how you use them the right way. It's a simple 3-step process. 1. You identify your key levels on the chart, your floors and ceilings. 2. You patiently wait for one of these candlestick patterns to show up at that level, and you treat it as a hint. And 3, and this is the absolute key, you pull out other tools like indicators or just the overall market structure to confirm the signal before you ever click the button. All right, now for the final piece of the puzzle. I know memorizing all these different patterns can feel like a lot, especially when you're trying to watch a live chart. But what if I told you there's a much, much easier way to do this? So that's the big question, right? How in the world are you supposed to keep an eye out for dojis, engulfing candles, hammers, and everything else all at once, especially if you're watching a few different charts? It sounds kind of impossible. Well, it's not. The secret is to let your software do all the heavy lifting for you. Most good charting platforms, like TradingView, for example, have built-in indicators that are designed to find these patterns automatically and flag them right on your chart for you. And here's exactly how to do it. You just click on the Indicators tab, type in the name of the pattern you're looking for, like bullish engulfing, and just click to add it. You can do this for all your favorite patterns and just layer them on your chart. From then on, you'll get an automatic heads up every time one of your go-to patterns appears. It's really that simple. So, there you have it. You now have a complete toolkit for reading the charts. We've got the key reversal patterns, the best confirmation patterns, the 3-step strategy for using them correctly, and even a way to automate the whole spotting process. But that leaves us with one last massive question. Because we've all been there, right? You see a perfect pattern, it looks like a textbook setup, you get ready to trade, and then the price does the exact opposite. That's a false breakout, and it's maybe the most frustrating thing in trading. So the real question is, how do you avoid them? We'll tackle that in a future explainer. Thanks for tuning in.